welcome everybody. Assalamu alaikum. Good afternoon. Thank you for joining our first in a series of webinars around internal controls. This session will focus specifically on internal controls over financial and reporting. And we're really excited for you to join us. My name is Timur Ghazi. I'm a partner out of our Houston, Texas office at RSM. I focus predominantly on helping middle to large organizations like yourselves be more compliant, get to a place where they have good governance, they have a good system of internal control, and we've done that predominantly in the energy and manufacturing as well as the financial spaces. And I'll be leading your presentation today. But with that, first I'd like to introduce my colleagues here. Walid, you want to go next, please?
Oh, all right. Thank you so much, Taimur. My name is Walid Mar'i. I'm coming from the Middle East. I'm Egyptian. I'm based in Riyadh. I come with almost 17, 18 years of experience between Saudi Arabia and the US and Egypt. My focus in the US as well was mainly on the SOX engagements, where I served many different companies on the energy and the power and utility sector. So today it will be my role would be mainly focusing on bringing and bridging the between our team from the US and here in Saudi, and answer your questions, whether it's regarding the SOX implementation and the different regulations in the region. Nazif?
Yes, thank you, Walid. Assalamu alaikum, everyone. Nazif Sharik. I'm actually based out in Houston, Texas. I'm the consulting leader for our RSM office in the greater Houston area. I have been with RSM for over 8 years, but prior to that, I bring a collective experience of about 25 years in professional services dating back from Coopers and Lybrand to PricewaterhouseCoopers and then UHY BDO and now RSM. My focus is mainly around technology, and I am a CPA, so I have a really good understanding of all the accounting functions, but how it really ties into today's world of utilizing technology, the integration, and the risks that comes into play. And to Timur's point, how does that evaluate from a management risk perspective in making sure that your governance model is really aligned with your organization? So helping companies really build a good governance model, but working in all industries from energy to financial services, retail, manufacturing. And so seen quite a bit. But with further ado, I'm going to pass it on to Ann Slattery.
Thank you, Nazif. Good afternoon, everyone. My name is Ann Slattery. I'm a partner in our Houston, Texas office, also in risk advisory. For the past 16, 17 years, I've been focused on internal controls and internal audit. So not only, of course, implementing SOX and other compliance regulations at our clients, but I've also implemented SOX and run SOX in-house as a chief audit executive in a previous role I held before RSM. So seen SOX implementation and monitoring from both sides, and it's a journey that we look forward to talking to you guys more about today. Thanks for having us.
Thank you. Thank you, guys. So we'll jump into our agenda here. We'll be talking a little bit about the history of SOX or internal controls over financial reporting, how it all started, what was some of the triggers behind it, and what does it really entail. We'll discuss some of the benefits of why you want to have an environment that has strong internal controls. We'll talk about what it takes to implement that, as well as really what it takes in terms of time to put something like this in place. We'll briefly discuss some of the RSM solutions we have, and we really want to make this, a little bit of a, open session for you guys. So we do want to spend some time talking and answering your questions and talking about some of your concerns. So throughout this presentation, if you do have questions, please use the chat feature and write your questions in there. Once we get to the Q&A session, we will try our best to answer all those questions, but in case we don't get to all of them, we will certainly get back to you. So the first thing really is, why are we really here? Why have we invited you guys? Why have we invited our patrons, our clients, our friends to this webinar? Well, the reason really is that, Saudi Arabia is on an amazing journey. It's a transformative journey, as you all know. But part of that journey is dependent on a strong foundation. And that strong foundation really comes with accountability and transparency. So here's our message to all of our patrons, that with the upcoming vision of the 2030 internal control requirements around internal controls and transparency, we have partnered, the US firm and Saudi Arabia have partnered together to design a very comprehensive program, which will be tailored to fit the needs and size of your company. And we're here to offer that program and solution to you. We're here to educate you about what to expect in the next couple of years and what that journey really looks like. So it's going to be an incredible journey, but it is an uphill battle. These things take a long time, and you'll see a lot more of that here in the next coming slides. But before we get any further, I'll pass it to Nazif to talk a little bit about where we really came from and why we're talking about ICFR.
Well, thank you, Timur. So as you all recollect, for some of you, I was actually sitting about 4 buildings apart from the Enron towers. They actually embarked on building 2 towers, and they were connected buildings, and Enron was leading a lot of initiatives, not only just having a seat at the table at the White House, but in the administrative elements of policies, but also driving how energy industry needs to take form and shape in the years to come. And as part of that process, I think to demonstrate that you're a leader, you always have to show that you are doing very well. And in Enron's case, I think management did get a little bit more creative than they should have, and there weren't any set boundaries per se for them. So what happened is they started having some financials that were had losses related to their businesses and segments, and they started putting those in off balance sheets and off income statements, and so they weren't really part of the financial reporting process, and they weren't even visible to the auditors. But at the same time, you have auditors like Arthur Andersen, who was the auditors for Enron. Their audit fees was somewhere in, I believe, about 5-6 million. But then Andersen was actually billing them about over $1 million a week on consulting services. So there was definitely a concern around objectivity and independence, both in fact and appearance, and that did muddy their judgment as far as what they were looking to make sure that management was doing the right things to ensure that they uphold the standards to their stakeholders, mainly stockholders and investors in the market. And so when Enron fell, so did Arthur Andersen. There was a lot of lawsuits, and it was nonetheless very drenching because I actually saw folks walking off the building with cardboard boxes who had $1 to $2 million in their retirements, or people who had investments, and that was dwindled down within 2-3 days to $100. Just imagine your entire retirement, you've worked 20-25 years, you capitalize on about $2-3 million, and now it's down to $100, and you got to start again. So definitely there was a lot of greed involved, a lot of influence and power that took place, and that resulted in more unfolding of other organizations like WorldCom. I actually had 2 material weaknesses that we issued for the Fortune 500 companies, and you can look them up because it's all public record. But one of them was Dynegy, and they were a big energy trading company too. And basically what they were doing, they were having some legitimate trades. However, at the end of the day, just to show the robust economy and the activity in the market, they were having wash trades. They would have a trade in the morning and wash it in the evening. So, but the volume was so significant that everybody in the market had a perception that it's doing well. So what that led to is Senator Sarbanes-Oxley came up and they're like, well, this is just getting out of hand, where there is no oversight as far as what management should be doing, how they should be addressing shareholders' confidence in the market, and that the SEC needs to also bake in some regulations to help manage and create more transparency, as Taimur mentioned earlier. So with that, you had the enactment of the Sarbanes-Oxley Act, and that required and mandated all accelerated filers to file with the SEC and report on their internal controls over financial reporting. And what essentially that resulted was also some scrutiny around the public accounting to build some confidence. They wanted to make sure that they would prohibit a lot of consulting services that would impair an auditor's judgment or objectivity as part of independence when they're performing audit of publicly traded companies. With private companies, not as much scrutiny. However, over time, that has also evolved to make sure that there is some level of independence when it comes to when you're auditing a private company, even though they may not be listed on a stock exchange, but nonetheless, there is a duty to your bankers and other investors, whether they're private equity groups or just private investment groups that are helping the organization to build transparency. So as part of that program, they also said, from an auditor's standpoint, build a program where every audit partner would have to rotate every 5 years within the audit of an engagement. So you have a fresh set of eyes, more objectivity, and you don't get too comfortable and complacent with the existing environment, because then you're not able to really go through an objective standpoint and look at, hey, are there elements of fraud, errors that could occur as part of the financial reporting process? So having said that, I hope that gives you some kind of an idea, and pretty much all this stems from greed and showing that you have a great company that's growing and you're basically tying your value to the stock price and trying to get shares and gains to your investors. Taimur, you can go to the next slide. So as the U.S. embarked on the Sarbanes-Oxley Act, a lot of the other countries followed suit, and they wanted something similar. However, there was a transition plan which took place because the international standards were being also developed as part of the process from an accounting standpoint. And so slowly, as you can see on this map, the global map, a lot of countries adopted some variation of internal controls over financial reporting, and they had their own flavors of local regulations and the likes to make sure they're addressing to not only their local markets, but then also to the international markets. Because given we have moved into a more of a global economy, there's a lot of investments coming from other countries. And so you want to make sure that you have a standard platform that everybody can relate to. That's why ISO standards came out. They're well recognized throughout the globe. And so SOX also being around, very specific to internal controls over financial reporting came, and it was incumbent on all these countries to have a common language by which they can gain investor confidence in the global market. Even though if you're sitting on the other side of the continent, you want to feel comfortable that management's doing the right things and I'm making the right investments in that organization, and my investments are going to be protected and well taken care of, and there's accountability to that process. So We intentionally kind of left the Middle East section there because I think we want to focus that as part of our market. And I will get Walid to expand on how that evolved from an overall Middle East market. So Walid, please.
Can you hear me?
Yes.
Excellent. Well, thank you so much, Nazif, and the team on this initiative. As you can see, we have seen lots of initiatives going on over the last few years in the Middle East to emphasize on the importance of enhancing the governance practices across the board from the different countries. And we have seen many countries issuing new regulations to emphasize on the need of enhancing the public trust and increasing the public trust on the financial statements from different perspectives. And recently, we have seen, for example, we have selected some of the countries for you to give you a brief and a snapshot on the situation in those countries. However, this is not a full exhaustive list. This is only a sample of the regulations here in the Middle East. For example, we have seen in Qatar issuing a new regulations regarding the corporate governance and the rules and responsibilities of the board, enhancing or emphasizing the need that the board will have to give their comfort and assurance on the effectiveness and efficiency of the internal control environment. And as well as, of course, the board will have to select one of the frameworks in the market that regarding the internal control. So all around the internal control environment, enhancing all of that. The recently, as well in the United Arab Emirates in 2017, the Abu Dhabi Accountability Authority has issued one of the resolutions that all government entities or any government or any companies that the government is owning about 25% or more has to implement and adopt internal control framework and focus on the internal controls over financial reporting. And that's also there were some other I would say new regulations that were issued by United Arab Emirates from Insurance Authority as well, and from the Securities and Exchange Authority on the governance. On Saudi, with the local scene and landscape here in Saudi, it did not go far away from what's happening in the region, and they also implemented and issued new governance code that was recently updated in 2023 in alignment with the Saudi companies law as well. But if you had the chance to look at the requirements from the board of directors as well, there is an emphasis on the board of directors to report on the internal controls efficiency, and we have seen many other committees asking us as consultants to help them out on these types of reports. So the momentum is going on between the different countries in the region, and we have seen also the other regulators like the central bank in Saudi, and that are focusing and mandating the financial services companies as well, focusing on those areas. So there is a momentum going on between the different countries and the different regulators. So there will be a requirement from these companies, whether it's a listed company in Saudi or in Qatar or in UAE, or it's a state-owned company or it's a government entity like the one in Abu Dhabi, requiring more focus on the internal controls over financial reporting. So within that being said, the momentum is happening right now and rolling out across the board between those countries. And we think this is the time for you to give you a background about the requirements, give you a background about how it can be adopted and implemented within your company. And I think most or all of them are in alignment with the SOX requirements, and especially the Section 404 that was issued in 2002. So, being that said, I think the momentum is happening right now, and I think companies should get ready for this, for those requirements, and help the board and the audit committee to report on the internal controls over the financial reporting. The management has major responsibility on that. The external auditors has major responsibility as well that on those areas. And I would leave the floor for Nazif to continue on the rest of the presentation.
Well, thank you, Waleed. And this was very insightful as Waleed was talking about this. I think this is more important when you think about internal controls over financial reporting, and why do we really need to have something of a similar platform that's recognized globally, is the vision of 2030, right? The government, the kingdom basically wants foreign investments to come in, and you need to have a level of confidence in your financial reporting process to make sure that folks all over the globe can feel comfortable investing. So as an operator within the organization, whether you're an internal audit or chief accounting officer, controller, or CFO, it's really your responsibility to say, hey, how do I build that confidence? Because our organization could also, may get some cash injection from an outside of the country, whether it's another company through a joint venture or other mechanisms, because you really want to have more capital investment coming into your country to improve the overall financial dynamics, as well as the growth and the future of the country, right? I mean, the goal is to improve employment, improve the overall status, and bring an image throughout the process. And growing up in Saudi Arabia, I did grow up a little bit. I spent some time, and it has evolved. So the focus is all to build confidence in the market. And so we got to look at it, and you got to kind of fit for purpose for your organization. How is this really gonna benefit my organization, and what are my roles and responsibilities within that I need to comply to address shareholder or my investor confidence or the banking institution that we're dealing with. So to install trust, you have a common framework, right? So SOX allows you that to have a common language, that we're all talking about internal controls over financial reporting. And essentially what you're doing is making sure that you have a good set of financial statements. When somebody receives them through an electronic medium or whatever medium is chosen, they can rely and look at those numbers with some level of confidence that these have been vetted out, they have good governance around those, and I can rely on those numbers to make whether my investment decisions or even operational decisions. So SOX really enhances and goes not only specific to financial statement, but also helps from an operational standpoint. And it's actually forced management to really understand the intricacies of their businesses. I think before management got complacent, they were just issuing financials. There were not as many stringent checks and balances. But with SOX, what's happened is management started to understand, how are my operations impacting the underlying financial statements in my account balances? So when I look at certain revenue statements or revenue accounts or doubtful accounts or estimates that I need to make, how do I manage to make sure that I'm making the right decisions and making the right journal entries? And so you need to have good financials and a foundation to make sure it's consistent, and it's going to identify anything that may have an error or an indicator of fraud and leakages in your system. So essentially, it's building trust, making businesses more accountable, making sure that your financial statements are more transparent. It allows you also to improve and kind of move into a new realm of using technology as a basis of producing your financials and transparency. Because when you include technology, it becomes automated. You're not using manual processes where there may be a chance that a human being can make an error, and that results in financial misstatements, or auditors find an error, and then you have to make an auditor's adjustment in the financial statement because it was found. So that doesn't reflect well of management, that they're not really addressing those key controls. And when you have identified those key controls, you can actually tie it to your cycles, which allows you to really measure how well those relate to each other. So there's a direct relationship between internal controls and your underlying account balances. So building that will allow management to have better transparency and to ensure that any material information is reported accurately. So if you find that there's a glitch in the system, or if you see a certain account balance that's materially off, that could be caught because you have lack of internal controls, or your internal controls actually identified that they were not operating effectively, and as a result, it resulted in a material misstatement. So, SEC has required very stringent rules as well as part of this process. And within the US, actually, we all, as auditors, we actually come in and go through inspections every year on the quality of the audit and how well are we making sure that management's doing what they need to do. At the end of the day, as auditors, we have to defend management's position. That means as auditors, we need to understand what you're doing. So you'll be required by your auditors, whether it's RSM or any other firm that's out there, to make sure that you can give them the level of confidence to defend your position if something or an inquiry comes up as part of your business and transaction processing. So with that, it's got to also build an auditor's confidence, and we have to go through a rigor of training and exercises and complying with our standards, whether you're a chartered accountant or a CPA, to uphold that confidence in the public arena. With that, Timur, you can go to the next slide, and I can talk to this ad nauseum, and I know they give me a ping. Timur will say, hey, you can just go on, so make sure you check yourself from a timing perspective. So hopefully we're doing good on time, and I'll just briefly spend a couple of minutes. So as part of this process, the Internal Audit Association basically came up with a model where you need to make sure, in order to really align your organization well, you have to have a governing body, right? Which is your board of directors, your audit committees, and others that make sure that the right roles, responsibilities, and leaderships have been established within the organization so they can be reported up to the board, because board has a responsibility to the stakeholders at the end of the day, and they kind of provide a direction to a company of where they need to head. However, they leave the nuts and bolts to management to drive those behaviors. So when you come to the management level, you have to not only identify that we've put a good management structure there, but when it comes to management, you got to have focused lens on different aspects, because as a company, you want to drive your operations, you want to drive your business at an optimal level. That means your business is doing well, you're making money, you're increasing wealth for your stakeholders, and you're driving business, and your objectives and goals are being met as part of your, whether it's delivery of products or services. So management's responsible for that. However, that also increases the level of risk, because when management's told, hey, you need to meet certain thresholds of revenue and things like that, they're pushing hard their entire teams within the organization to meet those goals and objectives. And when that happens, sometimes people and folks, naturally so, whether they're scared of, hey, if I don't meet these goals, what's going to happen to the company, or my value of the shareholders going to go down? How is that going to reflect? I want to keep pushing the envelope. And in that case, they also make mistakes, or they take shortcuts, which results in risk. So management is not only now responsible for making sure, hey, you got to run a business very well, and it has to be organized. It's optimal. But now you have to put all these parameters around your business to make sure you're meeting the regulations. You're meeting transparency. You're making sure that all your business transactions are done with utmost integrity and oversight. And so if something does not smell right, you can smell if there's a rotten onion there, right? Or something is not really reflecting well of what you see in the business versus what you're seeing within the numbers as a CFO or chief accounting officer. So management has to really develop a design of internal controls around those financial metrics to make sure when the operations report and those numbers are translated into your financials, are those all kosher? Just they look good, they have good parameters established, so you're not really moving outside of the guardrails, and that you can do anything you want and create a journal entry that looks good, and then next quarter, reverse that journal entry. So really building that controls universe. But then now you have another layer, which is that third layer, is also having an independent party either within the organization or outsourced by management to say, hey, we've established our framework and we may be following a SOX framework or ITEL, COSO, all these frameworks, but we want somebody independent within our organization or as a service provider that we outsource the internal audit function so they can objectively look how well we are doing. And as management, are we delivering on the promise that we have told our stakeholders, our board, that we're responsible for? Are we living up to the values of making sure there's integrity, there's responsibilities, there's ownership, there's transparency baked into that process, and there's adequate oversight? So when you have internal audit function as a third line of defense, they're really saying, okay, well, management, you failed on certain fronts, or we see there's a lack of compliance in certain areas. You need to beef that up. You need to improve your posture in this space. So let's work together, and we're going to report this independently from a reporting structure to the audit committee that will also report to the board. So there's some line of objectivity and independence baked into it, but collectively you work to improve the overall posture of the organization in building shareholder confidence. So hope this is very helpful overview. Don't want to go into the details, but there's more to come as Timur and Ann will be sharing that with you guys in future slides. Thank you.
Thank you. As you can tell, this is Nazif not going into the details. So there's a lot more to discuss there, and a lot more that we can share with you. So I wanted to take some time, and you and I have probably done this. I don't even know how many times we've done this. What does the implementation lifecycle look like? How do you go about implementing? And what is the general timeline of going to a mature internal controls environment look like?
Yeah, thanks, Timur. I think we can talk. All those previous slides have kind of been about what it is we need to do and why, but I think the how is probably the biggest question on most people's minds. So what resources do we need? What are the steps? How do you get started? I mean, I know for a lot of our clients, that first meeting where we're kicking off this process can be a little bit overwhelming, and just with a lot of questions. So the two slides I'm going to go over, this is just a taste of the high level of the steps that we take and the timeline, a general timeline. The slide you see in front of you has the general areas of an implementation process. So this is not an ongoing regular SOX year. This is when you get started and you say, okay, we've got to figure out where we are and what do we need to do to get to the next phase, to that more mature phase. So you can see that the first step is really around a rapid assessment, and I want you to think of that as just a health check. So, you don't want to dive in too deep before you step back and say, okay, where are we in this journey? So, initial SOX discussions, understanding the current state environment. A lot of times that will mean documenting your current state environment. So sitting with process owners and understanding what controls, what checkpoints they're doing currently. And, somebody that has been in many different environments that's more seasoned in the space is going to be able to pretty quickly give you an idea of where you are on that scale. And the reason that's so important is because this is the stage that really dictates how long it will take to get to the place where you'd actually be able to do full scale testing. So that's the first phase. Just as important is the second phase around awareness. I think one of the things that you can go into an organization or start with your own organization and do all the research and digging you want about controls. But if you're not educating and talking to the people actually doing the controls within the organization, then eventually the process is going to fail. So everyone has to be bought into, why are we doing this? What is the purpose? What is my role as a process? When we say process owners, just meaning that the folks doing their jobs every day. So the people in accounts payable, the people in accounts receivable, the people doing the journal entries, those are the folks we're talking about that we really need to get on board from the very beginning and help them understand what this process looks like. And then once you kind of do those first two steps, you'll have a roadmap. You can say, okay, now we can start with the design. Now you can go into your processes and start to design controls that fit your organization. And at that point, you'll have, this is where you'll really start to see some concrete deliverables around flowcharts, lists of controls that the organization needs to implement, risk and control matrices, gap analysis reports. And then the clock kind of starts on, okay, we understand where we are. We've designed the controls that we need to implement. So now you can enter that execution phase where business process owners are actually starting to, actually execute the controls in the field. And then the independent internal audit function can start to test those controls. And of course, then we enter the monitoring phase. And this is where, year over year, you'll be doing the same process of looking at, what's changed, monitoring the operating effectiveness of the controls, understanding if there's any deficiencies. And that's kind of the ongoing year over year cycle. And all of this, again, just to take one big step back of all that detail, all of this is to support the CEO and CFO being able to sign off in the financial statements that, the controls are operating within their organization, and to give leadership, management, stakeholders, shareholders comfort around the controls within the organization, therefore the accuracy of the financial statements.
And if you don't mind, just a question for you. So what I'm hearing is, at the end of the day, management needs to own all of these controls, and they need to make sure they're operating. And then you have internal audit that needs to basically come in afterwards and make sure that what they're telling their stakeholders is correct. Is that pretty fair to say that? And then,
well, yeah, pretty fair. I think the only nuance I'd say is that really internal audit's testing these controls to support, as an extension of management, to support their sign off.
okay.
So, it's up to the leadership, the CEO and CFO, the extent of the testing of controls that will happen. Best practice is to have, full scale operating effectiveness testing to support that sign off.
That's helpful. Thank you.
And then I this is kind of off track, but it's not related to this slide. But one thing I did want to mention was just a really important factor that I think we'll probably deep dive in a different session and in another part of the series is working with the external auditors. So, as a public company or even a private company, you would have an external auditor, and eventually they will also have to, give an opinion around the internal controls. And so a big part of our job as the internal audit function implementing SOX is to work with the external auditors to get them comfortable with the SOX program. And that is a really, really important part of the rollout of SOX that you don't want to miss, because eventually, they're going to have some reliance on those controls. And it's just a really good practice to make sure that you're aligned with your external audit team.
Yep. So how long does it take?
Yeah. Okay, let's talk timing. So first I want to say it really depends. I know that's not the answer everyone wants to hear. But I go back to the fact that, in that planning and scoping assessment phase, the reason that's so important is because that will dictate how long your organization needs to get their house in order, right? But generally, we see the first year, you can see here, kind of the first year of SOX around planning, evaluating, implementing design, and then in year 2, going through kind of that operating effectiveness, more full-scale testing. In order to get to your organization to a place where you can have a fully compliant, ongoing, mature SOX schedule, I think what we're trying to get across here is that can sometimes take multiple years to get to that place. And so, an example I give is, or that I thought of when I was preparing for this, was we were just in a client's office and they, have never done any SOX before. We're just coming in, socializing the idea. We did the design assessment. And one of the things we noticed right away was that they're going to have to in order to be able to have a full SOX program and be compliant, they're actually going to have to make some changes in resourcing. So, from a segregation of duties perspective, they just didn't have some people in the right positions. And they potentially need to hire a couple people also in order to have that appropriate segregation of duties that SOX dictates. So I give that example because that's something that doesn't happen overnight. So there may be things that you discover in that kind of discovery planning phase that actually, you have to make a pretty big lift in order to get yourself to a place where you can then, move forward into a more mature environment. So, that's why getting started early is just the best advice we can give to anyone, because even if you just do that assessment and understand where you are, at least you'll know. Because you can see here, it can take some time.
And it's really
I know you have a lot of examples or insights from this too, because we're always in the field together. Anything you want to add?
All the things that you said are right on point. The only thing I'd add is it's more than anything else, I see this as a culture shift in an organization. It's not as easy as just coming and saying, here's your controls, here's your it really takes a different mindset to be operating within those guidelines. It really takes a different mentality. It takes people time to understand that there is value in having these controls in place. There is value in making sure there's transparency. So, it's one thing to do it to check the box, but to really do it right, you have to have that right mindset, which takes a long time to build. Excuse me. So that's really why we wanted to bring this timeline to you. And in organizations where we do this, especially organizations that are maturing, that are probably in their infancy stage in that maturity model, it takes a couple of years. There's a lot of education, there's a lot of ownership, responsibilities, and as you've seen in different parts of this presentation, there's a lot of players involved. It's not just RSM coming in and saying, this is what we can do, and here's how do we do it. We have to have commitment from the board. We have to have commitment from the C-suite. We have to have commitment from boots on the ground, the people that are operating these controls, to really be able to get to that finish line. So it's a lot of coordination, and everyone needs to understand their roles and responsibilities really well to be able to do it.
Great point.
Awesome. So with that, I guess we'll talk a little bit about some of the packages we've put together for this purpose, and how RSM Saudi in conjunction with RSM US can really help you get to that place. The first one is really just implementation and consulting. So how do we go about an implementation? How do we go about educating the board. What does the board need to know? What does the C-suite need to know? What do your teams need to know? And then also, we have a lot of packages that deliver boots on the ground, training, boot camps for people that are working in your organization, so they understand really why they're doing certain things and what the objective is at the end of the day. We can help you with just controls rationalization. You might be an organization that is a subsidiary of a US firm or any other country that has certain regulatory requirements, and you might have somewhat of a controls framework in place. We can come and look at that. We can rationalize those controls. We can understand and make sure that your control environment is addressing all of the relevant and necessary risks, and then optimize that control environment for you. Really more of a, hey, you're halfway there, here's what it's going to take to get to the finish line. We can do project management services. You might be extremely proactive and say, we already have an internal audit function. We already have a team that is doing this. This team is well versed with controls. We just don't know how to make sure they're all well coordinated and running the same race. We can bring in people to project management that or PM that and really advise on that as well to make sure we've got the right folks involved and that the timeline makes sense and what are some of the milestones that we need to think about. The fourth one here is just a full outsource or co-source model where we operate as an extension of your company. So we would operate as an extension of your organization and really act on behalf of you, and in working with the external auditors and working with your board and presenting to the audit committee and presenting results. And we drive that process from end to end. And it can be a little bit flexible. You can go with a co-source model, which might be, you have half the team and you bring in consultants to advise on the other half, or a full outsource model where you have one person in your organization, the CFO or the controller or the internal audit director, who comes to us and says, we want you to do the whole thing for SOX. And for starting from year one to the end of the year, you need to report back to us on what the progress is, what are some of the issues. So we can really take it entirely and help through that. And then the last one is just deficiency remediation. So we have a lot of clients that, especially that are in their infancy stage, have material weaknesses or significant deficiencies in their environment, and they really don't know how to go about fixing that. So we can come in, we can evaluate the deficiencies, we can do sort of a rapid assessment of your environment, and really consult on how you're going to be able to get from point A to point B. How do you get to that place where those deficiencies go away and the auditors are satisfied or the governing bodies are satisfied, and really make sure that you're addressing the risk that's been outlined in those deficiencies. So this is really a bullet list of items that we put. Each one of these are packages. Each one of these are extremely customizable to your company, to your needs. But we just wanted to share what are some of the things that we can do. I would highly encourage you to call us if you have questions, if you're not sure about which direction you want to take. Let's set up a conversation and let's really talk about what it is that your company needs and how we can tailor that fit for purpose model for the needs of your company. The next thing is just, I won't spend too much time here, but really what we're trying to show here is, before we come to you, we have looked at our model, our delivery model, our client service model, and we've involved the right players to really set up the right infrastructure and bring the experts in to speak to you so that you're not having to backtrack. Really, we have sponsorship, of course, your local partners here in the RSM firm, but they are directly connected to the Ann Slattery's, the Nazifs, the Taimurs of the world, to provide firsthand support. We will even be engaged in client service directly as we go through this journey and make sure that our teams are successful, make sure that you are successful. And we have, in the US, we've done this for over 20 years. So we have a robust amount of guidance. We have a lot of good methodology. We have the tools, we have the infrastructure, we have the people to be able to support this. RSM is the 6th largest accounting firm in the world. In the US, we're the 5th largest accounting firm. So we have, you know, over 10,000 people in the US, over 50,000 people globally to be able to help in any way possible. So I just wanted to show that we are all talking, we're all connected, we're all holding hands in this process, and we're here to support you from that perspective.
Well, thank you so much, Taimur and Nazif, on the presentation. We wanted to bring some more insights from the right people from the US who has the experience and has the knowledge on practical experience with different industries to bring you here in the for the region the right insights and answer your questions as we go into introducing those requirements in the region. So as you can see, we have some of the questions about who's responsible for the accounting audit or the SOX audit, for example. And I think, Nazif, you can answer this question from governance perspective.
Yes, definitely, Willie. That I'm actually scrolling through some of these questions, and when it comes to an organization, it behooves me when folks say, "Hey, this is a finance function, so it should only be the CFO or the chief accounting officer and controller responsible." But when you think about an organization as it relates to regulations, you get a paintbrush approach. When there are indication of misstatement or fraud in an organization, it goes to all executive levels. It doesn't stop just to the finance function. It may go to marketing, it may go to HR, it may go to legal, it may go to, so all within the entire organization, the exposure lens is there. So don't feel that you're not part of a particular function in finance, hence you're not responsible. But you have to kind of evaluate that as part of your role. How is that impacting the financial statement? If I'm here to help company from a legal standpoint to ensure compliance with certain regulations, insurances, things like that, exposure, how am I integrated to that? And if you don't do your part, you're going to be held accountable. So essentially what I want to say is, don't let your guard down just because you operate in a different part of the organization. Every single employee should have some level of responsibility, ownership, and accountability to what they do, and make sure that process is transparent. Because what we've seen over and over again in experiences, we've seen fraud and errors coming through IT function. We've seen fraud and errors come through HR, legal, marketing, finance. So you can't just say, well, hey, it's the CFO that's going to be responsible. I believe there's some CEOs here too. You as CEO are equally liable to make sure that that governance model is there. You may not have to directly own that specific responsibility, but you share that with your C-suite and the executive level. So hopefully that addresses your question. I don't want people to lose sleep. When you talk about Enron, you had Jeff Skillings and Ken Lay. He was a CEO. Guess what? He was also responsible, and he ended up having a heart attack and he died. There was so much pressure when you lose $74 billion in market cap. That's not chump change. You impacted the lives of thousands of people. And so these things cannot be taken lightly. But at the same time, I'm not saying lose sleep over it, but you have to do your part as part of the organization.
Excellent. Thank you so much, Nazif. So do you want to add something, Taimur?
I think I'm just looking through these questions, and they're all such great questions. We are 5 minutes away from time, so I would just encourage you, if we don't get to your answer, please send us your question in an email. And we do want to, there's things about objectivity, value proposition of the internal audit function, and how it impacts. I did want to speak to one thing, which is there was a question around, is this mandated in the Kingdom of Saudi Arabia right now? And the answer is yes and no. Yes, because the corporate, the Saudi Arabian Capital Market Authority has issued their corporate governance regulations, which, if you look at those regulations, they are extremely similar to what regulations we have in the US at a very high level. Board oversight, transparency, effective functioning internal audit, management's responsibilities, all of those types of things, stakeholders. So if you think about that in the context of what Nazif was saying earlier, US started this in 2002. After that, a lot of other countries started adopting it, and they've all gone through this similar journey that Saudi Arabia is going through right now, where they first release, here's our regulations at a more governance level. Then you get into, there's oversight committee. There may be the SEC, for example, in the US has certain requirements. There's regulatory inspectors. So, as you go through this, more and more gets latched on, and more functions get further defined, whether it's from a objective oversight perspective or from a management company responsibility perspective. So it takes, a long time. But what we have seen as all organizations have consistently adopted the very similar flavor of SOX that we have in the US, and that's where we see the Kingdom of Saudi Arabia heading, which is why we're here in front of you and bringing the SOX experts. It might not be called SOX, it might be called something very similar, but just the underlying regulations are exactly the same, and the requirements are exactly the same as well.
Yes, adding to your point, Taimur, as well, as you mentioned, the board of directors has to give their opinion on the internal controls, the effectiveness of the internal controls. And for you to adopt an internal control environment, internal control framework, you have to adopt one of the frameworks of the known frameworks. And for you to implement those, you have to follow the same alignment with the requirements issued by SOX and the others. So it's coming, and there are some of the organizations here and some of the companies that are already mature and already have implemented some of the internal controls over financial reporting. They are not called SOX, but they have adopted the requirements from SOX. Right now, as Taimur mentioned, it's in the governance code in general from the central bank and from the Capital Market Authority as well. So I don't want to spend more on that. And another question.
I think, Waleed, one of the questions that came about was the objectivity of internal audit and the value proposition, right? So I think there's a fine balance there, because the internal audit is, given it's a function within the organization, you want to make sure that independence is there and they have objectivity as part of their audit process. So it's good to add value to management's team, but at the same time, call it, when they're calling bluff, you call it out and you say, hey, this is not going to work. This is not going to fly. So you have to be very transparent and you have to be objective in reporting those findings, because otherwise you will not allow the entity to pass the litmus test on internal controls over financial reporting. And guess what? Internal audit would also get a grunt of it if something goes down the pike as far as not complying with the regulations.
Yeah, I think, Nazif, the objectivity piece, and I see a lot of questions around there around roles and responsibilities. The objectivity really comes from, there's a direct reporting structure of internal audit into the audit committee of the board, and not reporting to the CFO or the CEO, who are responsible for their own assertion on the controls, right? So the CFO, CEO are saying, we are comfortable that our control environment is sound, and this is our assertion. Internal audit is coming and saying, we agree with that, or we don't agree with that, but they have a direct line to the audit committee in case there is some issues at that C-suite level. The internal audit function has the ability to supersede or circumvent management's override and go into the audit committee and the board as well. So I think that's a lot of great questions. We still have more, and we'd love to get to them. But unfortunately, we're out of time. This will be a series of many other webinars. We encourage you to attend. We encourage you to reach out. Waleed, maybe you can speak a little bit to how they can reach out to us.
Definitely. So RSM Saudi Arabia has lots of offices across the Saudi. How big is because Saudi is extremely big, as you can see from. We have 2 offices here in Riyadh. We have one other one in Jeddah, and another one in Al Khobar. So you can definitely reach out to myself or to any of those mentioned addresses here at this slide. And definitely we will connect you with the right people, with the right expertise from SOX perspective as well, with the team supporting us from the US. Hopefully this session was valuable to everyone, and thank you so much for joining. We hope that we will do more and more in those series of SOX and other topics. Thank you so much from my side.
Thank
you,
you.
everyone.
Thanks, everybody.